We want to bring in Sandi Bragar, who is Chief Client Officer at Aspiriant. And Sandi, what are you thinking right now? It's been a little bit of a rough start to September. Is this a surprise to you?
It has, Becky, and nice to be here. The last time you and I spoke was January. We were worried that growth in the economy would be poor, that we'd be facing recession. So after a really cushy summer and highs in the equity markets, we are cautious about what happens as we head into September, but also, balancing optimism and pessimism. Our clients are corporate executives, family business owners, and entrepreneurs, and they're asking us one of two questions. One set of clients is asking, well, hey, equity markets have been so strong, maybe we should be pulling back on risk at this point. And what about cash? Let's have some large cash positions given the attractive yields there. Other set of clients are saying, hey, looks like we're looking at a soft landing. Let's pour into risk. And in both cases, we're answering with the same answer, which is we think it's important to stay invested, to pay attention to prices. We're a valuation-based company. That's our approach. And diversification right now is key, Becky, and we think it might be more important than ever.
Diversification, how?
Well, let's talk about the basics of diversification, stocks and bonds. In our equity portfolios, we're staying invested in the large U.S. companies, growth in IT related, but we are underweighting those given the fact that they're so pricey and interest rate sensitive. So what we've been doing with the rest of the equity portfolio is really barbelling between high quality stocks, companies with really strong balance sheets, little to no debt, companies that are going to do well in good economic times and poor economic times. And then on the other side, being opportunistic and pouring into more value-oriented stocks that are underpriced and really haven't seen as much of the sunlight this year compared to last. And so within that value area, we're focused on financials, energy, and also healthcare. And then on the bond side of the portfolio, it's really interesting. 3 years ago, as interest rates were going to be rising, we pulled back on bonds quite a bit. Now roll the tape forward, we think we're closer to the end of the rate hike cycle than the beginning. And so we're looking to add more bonds to client portfolios. In some cases, we have rotated a little bit into bonds this year, looking to add more with attractive yields, even compared to the cushy 5% money market yields.
Corporates, how long? Both?
Yeah, so we're focused on we really like the muni space. A lot of our clients are in high tax brackets. I think the 10-year Treasury is yielding about 4.2. If you look at a 10-year muni bond, you can get something closer to 5.5% to 6%, largely after tax. And so that's where we've been concentrating the bond side of our portfolios.
What about healthcare? You said that was one of the areas you like. There have been so many concerns about government negotiation with big pharma companies. Is that part of what you like in healthcare, or would you steer clear of the pharmas?
Well, they're definitely part of it. And we think that from current valuations, there's upside as we look out over the long term, Becky. So that's really where we're at. Healthcare is really interesting. If you look at it over the longer term, it provides two benefits to a portfolio. One is growth over time. The second is lower volatility than the broader markets. And so with a lot of healthcare companies seeing declines so far this year, we think that there's a good entry point and nice upside as we look out over the long term for our clients.
Sandi, thank you. And I hope we don't wait another 9 months till we talk to you again. Good to see you.
Thank you.